Okay, let us now understand about Income Tax Act 1961. Now I told you previously that this is the mother law governing the provisions of Income Tax Act in India. Okay, so this act basically prescribes how various people are going to be taxed, who all are going to be taxed, how they are going to be taxed, okay, what income they are going to be taxed, and various other provisions. All this is provided in Income Tax Act 1961. This act basically came into force on April 1, 1962 and is applicable throughout India. So it's not that it is applicable only in Maharashtra and not in Gujarat. No, it is applicable across. So if it is applicable in Maharashtra, it is equally applicable in Gujarat. I'm sorry for this spelling mistake which is there. Okay. This act is divided into 298 sections and 14 schedules. Okay. So you have to basically study all these 298 sections by the time you become an income tax expert. And then you have to study all the schedules as well to see what are the provisions relating to various things. Being a revenue law, Income Tax Act is a revenue law. Why? Because it is meant for the purpose of collecting revenue for the state exchequer or the central exchequer. Not the state, it is a central law. And it is subject to various amendments from time to time. So these amendments are brought in by means of Finance Act, which are brought about by various Finance Acts. I'm going to explain this to you very shortly in this video itself as to what are Finance Act. The last being Finance Act 2011. So Finance Act 2011 is the latest Finance Act which has been passed, although Finance Bill 2012 has been already introduced in the Parliament in the recent budget. Okay. So just to recapitulate, Income Tax Act 1961 is the mother provision or the mother law which forms the basis of taxation in India insofar as income tax is concerned. It came into force as on 1st April 1962 and is applicable throughout India. It's divided into 298 sections and there are 14 schedules. Okay, and it is subject to changes every year. Right? Now let us also understand what is meant by Finance Act. I told you Income Tax Act basically covers all the provisions of the India relating to the income tax laws. But whenever any changes are to be made to the Income Tax Act, they are made through a Finance Act which is passed every year. The Finance Minister presents Finance Bill. Please note, this is Bill. It is not Act. So Bill will contain basically the proposals relating to income tax. It also contains certain other proposals, but currently we are just dealing with income tax, which becomes Act once it is passed. So the Finance Minister presents Finance Bill as a part of the Union budget before the Parliament. So every year the Finance Minister presents this Finance Bill before the Parliament. Okay. The bill contains amendments to the this is existing. S is missing out here. The bill contains amendments to the existing provisions of the Income Tax Act 1961 as well as direct and indirect taxes. So there are amendments proposed to the direct and the indirect taxes in this particular bill. There are 4 parts in the first schedule which contains. Okay. So in the first schedule to the Finance Bill, there are basically 4 parts which contains the following relating to direct taxes. The first part will contain income tax rates for various assessees for the current assessment year. The second part contains TDS rates for deduction of tax at source. Part 3 contains the rate of advanced taxes and Part 4 contains rule regarding computation of income. Each one of these are a subject matter of complete discussions on a going forward basis. So just know that all these are to be done, but how, when, what is something which we will be looking at as a part of various chapters which we will be studying going forward. Okay? So just to reiterate, whenever you have to make changes to the Income Tax Act, they are done by means of a Finance Act. The Finance Minister presents the Finance Bill, which becomes Act once it is passed. Now, who all are supposed to pass this Finance Bill? This is to be passed first by the Parliament, and then the President has to give his consent to this. Okay? Once this is done, then basically it becomes an act. This bill contains amendments to the existing provisions for direct and indirect tax rate. We are concerned only with direct tax at this point in time. There are 4 parts in the first schedule of the bill which contains these 4 things which are relevant for direct taxes. Okay.